Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, on the line here with Brianna Valesky, and also Sheldon McIntyre, founder of 360 Virtual Advisor. Sheldon, how you doing this morning?
I'm doing well, preparing for probably another scorching hot day down here in Chile.
Oh, there you go. Yeah.
He has to rub it in.
What's the temps? Are you reaching triple digits there?
Pretty close. I think we're getting up to about 97, 98 Fahrenheit yesterday, the peak.
Wow, we are in the wrong place. Well, Sheldon, I know I've asked you this question before, but man, you're always in our chat room. You're always coming up with some difficult questions for guests, and don't you think I don't notice that? You come up with some pretty good ones. But what attracts you to Benzinga's pre-market prep show?
Oh, well, that's one of the reasons, actually. I mean, there's a number of individuals that come on that I consider to be, very experienced and knowledgeable market participants, and I'm always curious to get their views on certain things that maybe I'm not 100% sure of what the take is on it. And second of all, I just like to catch up on the news and trading ideas. Certainly, if they're I don't take a lot of trading ideas from other people, but occasionally I do extract here
You
and there
probably
from the
like if
show.
they confirm, like if you have an intuition on something and you hear like Nick Shaheen or some of our other guests talk about it. Not necessarily, it gives a little bit more validity to your thesis. I like that too. Earnings season is upon us. Are you one of these traders that okay, it's Apple earnings, I'm gonna play an option lotto ticket? How do you approach stocks and individual stocks and earnings season?
Well, I'm not. I don't do that. I don't
Okay.
focus on one large company's earnings and sit there and try and forecast what investments there. And I look at that. I don't sit in after hours or before market open, waiting for earnings to come out and trading them or doing something before the earnings release. I usually, if I hold a stock going into earnings and I don't have a lot of experience with the stock, I will close the trade going into earnings. I don't feel like I need to take that risk because I'm not an analyst, so I don't have hours and hours and hours of tearing apart a balance sheet or looking at webcasts that the companies have done in the past or what other analysts do.
Okay, all right. So now we're hard into the heart of earnings season. Just your overall, I mean, you've had some misses, we've had some beats, kind of mixed. S&Ps are really stuck in the middle of the range. Overall, what's your take on earnings season?
Well, I just actually saw an interesting chart this morning from
Really?
a research company, GaveCal. I believe it's out of Hong Kong, and they were showing the rapid decline in the 3-month change for EPS growth estimates in the United States, also for Europe. So, I haven't, like I said, I don't pay attention to individual companies or even as a whole what the earnings are coming out like. What I'm concerned with is what are the stock's reactions after the earnings.
Mm-hmm.
That really will tell you whether it was good or bad. I don't really pay attention to anything before that.
Okay. All right, let's talk about something that hit a couple stocks yesterday. Procter and Gamble in particular, the stronger dollar. Now, do you think that this is just a one-time phenomena, the rise in the dollar, hurting these companies' earnings, the dollar's going to settle off a little bit here, or do you think that this is something that's going to, persist, in the upcoming quarters?
No, it will persist. I think that
Hmm.
we're definitely in the early stages of a secular bull market for the U.S. dollar, and I think that in the next couple of quarters, it certainly will be one of the headlines that comes out of those type of international companies like Procter and Gamble. But we shouldn't be surprised by it, and I think that its impact, moving out maybe the next two after the next 2 quarters should begin to diminish and be accepted as a reality, and companies are just going to have to, operate accordingly based on that. I think that anybody who thinks that this is just a small blurb in the dollar, is making a long-term miscalculation, particularly when you put it in the context of the diverging monetary policies that are now existing in the major regions, Japan, Europe, and the United States.
Okay, so so you think that the companies are just going to, they're gonna adapt to this? It's really not gonna hurt the bull market. I mean, it's definitely showed some short-term effects. You just think the companies are gonna make the necessary adjustments, and the bull market will continue.
Yeah, I think they will. And, that's, as well as I do, this is not, back in the 90s when we had the strong US dollar policy under Clinton and Rubin. This is the type of headline that existed during then as well. And it certainly wasn't the end of the bull market. In fact, it was probably one of the best times to be a trader slash investor in decades. So, that's a pretty good example, showing that, yeah, maybe there will be select stocks, the large global multinationals that are going to be hit by a strong dollar. But, in terms of the stock market itself, I just don't see that. I think that the strong dollar, in fact, is attractive for the U.S. stock market, particularly when you see with the euro and the yen and the Canadian dollar, the Aussie dollar, the list goes on. I think people are making a race for the U.S. dollar, and that money eventually will end up in the stock market.
Okay, I want to get your take on Draghi's move last week. Much anticipated. I guess they threw a little bit more into the kitty than we thought. You got the QE for the United States, the Bank of England, the Bank of Japan, now the ECB. Boy, what's going to be the next catalyst, to take this market higher? I mean, just about everyone's out of the QE trick. What do you think? Or do you think that just the follow through from the ECB quantitative easing will be enough to put another infusion of money into the U.S. stock market?
I think so. I think that definitely you'll see a significant portion of that end up in the U.S. stock market. Obviously that money will also chase some of the better looking markets in Europe, and that includes, Germany for sure. When you look at bond yields in Europe, I mean, there's not much less left to chase there at this point. You will note that even going into the meeting, that bond yields in Europe in general, putting aside Greece, were stayed low. In fact, we're making new lows. So I think that money, at least a large portion, will end up in the U.S. stock market. In terms of what Draghi did, I don't think anybody was surprised by that. I think the last time I was on, or the previous two times, I'd said that was a done deal, that he was going to do something. Now I think really everybody's attention now is going to focus on the Fed. Of course, we have the meeting announcement today. I still think the Fed is going to move this year. Maybe it's been put out till June. I projected it would be in I think the April meeting, but maybe because of the volatility of recent economic releases, maybe that pushes out till June. But I think it'll be a one and done, 50 basis points. And when you take that into consideration, plus the buoyant dollar and everything, I think that the U.S. will remain the most attractive situation, even if they do raise rates by 50 basis points this year.
Okay, with the market kind of stuck in the middle of the trading range, is there anything that's coming, getting near your buy levels? Anything that you're looking to pick up here, earnings related or not? What's on your buy radar?
I have a number of stocks that have been on my buy radar, but
Okay.
one of the major problems has been lack of a breakout, or lack of much traction post breakout. I have taken some positions, for example, in INCY, which is one of the newer stocks that I've added, and ULTA and UTHR. Those are stocks that I've taken positions in. I still have a position, for example, in AVGO. I think I mentioned that in the last show, and that looks to gap up today on the very strong earnings, particularly the iPhone sales that were reported yesterday by Apple. It provides a couple of components in the phone, so it looks like it's going to gap up again today, as well as SWKS, which is a stock that I actually closed the end of the year. But continues to now break out into new highs. But like I said, I think that there's not a clear sort of area of the market that's providing a lot of strong leadership at this point. I mean, I know that people are like to trade the small or even the microcap biotechs for the big move. I see a couple there that I like. For example, CEMP.
Okay.
That's actually shaping a high tide flag pattern right now.
Oh, yep. Yep. I see that.
It's about
Yep.
100% move in 7 weeks, or a little more than 100% move in 7 weeks. And now, last week it closed with an inside week, and it's hopefully we'll put in another week of consolidation this week. That looks interesting to me. I like also AKRX, which is on my watch list right now. ANAC, Texas Instruments.
Oh, Texas. Okay. That one just reported, right?
Yeah, yesterday I believe it reported. Um,
All right,
there was a
moving
few
on to
upgrades.
you mentioned the stocks that related to Apple. Is any thoughts on Apple today? Blowout earnings coming up near all-time highs. Is that something you have in your portfolio? Something that you like to trade? What's your take on Apple?
Well, I read something early this morning about I think its cash load now is more than almost all the stocks in the S&P index now. The market cap of stocks on the S&P
Really?
now. So that alone is impressive in itself. It's a juggernaut. Let's face it. I mean, I personally am not. I haven't traded Apple in a while, probably in the last 12 months. But I definitely follow it. It's a bellwether for the market, and it does influence prices. But I've been catching good rides on the smaller, particularly in the semiconductor space. Like I said, AVGO,
Okay.
SWKS, to name two of the more powerful, what I consider to be market leaders, not only of last year but even late into 2013. So I do watch it, but I don't really trade it. I don't do options on it. I know that Nick, plays with it and is bullish on it.
What about this Alibaba? Yahoo spinning off the stock from Alibaba. Are those two issues of any interest to you?
I do have Baba on my watch list. This is one of those ones that's been beaten down quite a bit after a nice run. It looks like it's putting in a head and shoulders bottom there, from what I see. The problem is, I believe it has earnings coming out tomorrow
Real
or the
soon. Yep.
next day. Let's see. Yeah, tomorrow it has earnings coming out. I mean, I do have a 105.30 trigger price on it, but if it hits today, I'm not going to touch it. I just don't know enough about that company situation to feel comfortable taking a position in it today. But I definitely do have it on my watch list, and I think over a longer term, that is definitely a stock that I want to get back into at some point.
So you're looking above that. I mean, I know today it's not ahead of earnings, but that 105.13, 105.20, that double top there, you say another 10 cents just, if it
Yeah.
didn't have earnings on a breakout. I see that. Also, you mentioned biotechs is Mankind. That's a stock that is pretty volatile. Did lower price stock? Is that something you follow at all? Mankind?
No,
No.
I don't generally target stocks below $10.
Okay. All right.
I
And
don't personally. It's too small. The number of shares is quite large that I would have to buy for my account. And second of all, in terms of clients, I just don't feel comfortable. I don't think it's necessarily good business practice to recommend such small price stocks or small float stocks when they can't really get into it or they can't buy what they really need, to benefit from the stock move. So I generally stick with $10 and above.
okay, and Facebook due to report today. Really, I've been looking at this thing 70. Really, for the majority of the last couple months here, spending a lot of time between 74 and 78. You did have the run up to old time highs, and then after earnings, you did dip down under 72. Is there any way to attack this stock to besides paying huge premium, to put a straddle or strangle on in Facebook? Any ideas on Facebook?
Yeah, Facebook, it's interesting because it's come up on my screen the last few days, but when I look at the chart, it really looks like the stock market chart to me. It doesn't look It does, doesn't it? It's like
Yeah.
been basically in this range with a couple attempts to break out back
Right.
in the
Good.
fall, and then it looks like here in the end of December. But, it's not doing anything for me. I don't like how it's set up there. Maybe the earnings will be a surprise, but the chart says they won't be a positive surprise, in my opinion. But it does. It looks just like the stock market indexes, really.
Good correlation. I know you trade stocks not only long, but you trade them short in your portfolio. Is there anything that's on your short radar?
I was, out of luck really, but I was short Movado, the watch company, MOV, before the Swiss bank decided to remove the ceiling, and that was a nice drop there. I'm still short that. That's the one
Wow.
short position I have right now. I've been wanting, I was short a couple of the Canadian banks into the middle of January to last week. I would like to see them rebound back above the 200-week, somewhat some kind of corrective bounce, and then I would look to short those. I think that the Canadian banking sector, is in for some troubles moving forward, and I think that's definitely a focus area for me moving forward in terms of shorting.
Movado, I see that big move that it had down. Was that a stock split there or something when it went from 40 to under 30, or was that was it back in November? I'm looking at on the chart.
I don't show it as a stock split. I don't. I never really looked at that. What the reason why when I shorted it was, I pay attention to the 200 week quite a bit. In fact, stocks that have broken below that, and you show that the 200-day is really in a decent downslope. You'll see that it kind of consolidated there for much of December. I was not able to really react to that gap down. I shorted there, and then you'll see that it slowly was dropping, and then you had the ASMB. I took that profit and I actually re-entered the short yesterday. So looks like this is some kind of attempt at a corrective bounce there.
Sheldon, we got a question coming out of the chat here. Rob Hood, I promise we did not forget about you. He's wondering if you've picked up any indicators strengthening in the agriculture sector. He said you mentioned POT earlier this week on StockTwits.
Yeah, I think a couple of people have asked me about the agriculture sector. I mean, in terms of my work, that wouldn't be a stock that would meet my criteria. One, because the relative strength is below 70. And I don't really like the chart so much, but if I was to look at a stock in the group that might be actionable moving forward, that has the potential simply because the moving averages have curled under the price now and are providing some type of support. But I'm not familiar with the fundamental story in terms of agriculture. And when I look at the broad ETF, I think it's DBA, DBC, agricultural commodities still are not doing very well. In fact, I think they've been printing a new low recently as a broad commodity group. So for me, I wouldn't touch it. I just don't like the RS. The RS is clumsy. It's not a powerful move off the lows. Volume has not been solid. Price action's been choppy. So it was not something that I would play. If I was to look at an agricultural stock for a long-term perspective, I prefer the Chilean company, actually, Sokimich, SQM. It still needs to make it needs to put in a solid bottom here. Potash actually owns part of Sokimich, and what I like about Sokimich is that it actually has it's a big lithium play also. It has mining rights, and it's pretty solid in that space. So if I was to pick a long-term bottoming play, I would look more at SQM. It seems like it's got a better upside.
Okay, we've been on the line with Sheldon McIntyre. He is the founder of 360 Virtual Advisor, giving us a very even keel look at the market. We appreciate your input. We appreciate you coming in the chat as well, Sheldon. We'll talk to you again soon.
Appreciate it, Joel. Thanks for inviting me.